Ladles and jelly spoons. Are we all ready? Around the spotlight. Okay, what we're going to do, obviously, today we're going to do a presentation on trading for an income. I'll come to all of that in just a moment, but before we get started, our wonderful hosts here at FXPro have a few words to say, and Chu, the reason that we're all here today, also has a few words to say. So I'll hand over to Simon. And,
Thank you, Alex. Thank you for coming on what I read today is officially the hottest July day on record in the UK at 36.7 degrees Celsius, so that's good. And welcome to the London offices of FXPro. We've been going since about 2007. We're one of the first FX brokers set up in Cyprus. We've been set up in here in London since 2009. We got our full FCA license back in 2012, and as the name suggests, we predominantly do FX. That is what we do best, and we've worked a lot over the last few years on sort of our execution and relationships with liquidity providers throughout London to achieve that. But we also do equities, and I know Alex might talk a bit about equity indices this evening, so we do equity indices as well. And also, we've also recently introduced shares as well on our platforms in the last month, and so we have more products planned for the next half of the year. My name's Simon Smith, and I've been here just over 5 years. I started as chief economist, writing research and for our clients and doing media work. I do less of that now. I'm more involved in the running of the London office, where I'm a director, and getting involved in what that requires in terms of regulation, client assets, compliance, and all the rest of it. So that keeps me pretty busy. Also have Angus Campbell here in the blue shirt, who's our head of PR, and also sort of his analyst now and again. And I don't want to talk about FXPro because we've got a drinks reception afterwards, so we can stay and we can talk more informally. I think it's important that we hear what Alex has to say, and just a few words from Truth as well.
Hi.
you want to go forward? No.
Okay. Well, first of all, just to introduce myself. Do you know me, but you haven't seen my face? I'm behind all these meetup groups, Eventbrite and everything. The event manager from FXStreet is coming from Barcelona. It's time to be here at this meetup because it's live session. Well, FXPro is our sponsor for this session, and this is just a picture. See, so you can see who we are and why we do this. So this is me a year ago. And this is Francesc, the founder of FXStreet, that has just started with these meetups 2.5 years ago in Barcelona. So little by little it has grown up, and we can say that we are after 2 years in London, and this is amazing. And I can see Jesslyn, I think I've been talking to him. He was, I don't know when here. He was at the meetup. Oh, this slide you can see the picture, but he was at the first meetup. So we have seen in these 20 meetups many changes, and well, I just came here to thank you for all these 2 years, and thank you, Alex and FXPro, for making it possible. So, well, I don't know if you do, but you must follow the blog, because we put here all the different things that we're doing on the different cities where we have the sessions worldwide, from Sydney to New York and I don't know, Barcelona one day. It's quite useful. And I don't know, well, some people know about this university course we're given. Gus, also from FXStreet, I think, was talking about this. So, well, just to say that the new tech will start in August. And, well, follow us and share, and if you want to take pictures. And I will think this will be recorded, so probably you have to see on the blog what we have to do. We're doing today, so thank you.
Thank you. Yes. Thank you, Juice. Simon. Okay, let's try and sort my life out. So, what we're going to talk about today is something that I do every day. It's my favourite approach to trading. I've said it's trading for an income because often you will learn various strategies that you're looking to grow your accounts in a relatively conservative way, hopefully, over a period of months and years, and see compound interest and everything really take effect and see the benefits of that. What I want to talk to you about today is something for people with smaller account sizes. Right? And I want to be clear that it can be a much riskier approach to trading the markets. Right? So it's a double-edged sword. On the one side, you have the ability to make quite a lot of money in a relatively short space of time, but then you can also lose quite a bit if you get it wrong. Right? So it's really primarily targeted to maybe the 10% of your portfolio that's associated to high-risk investments, or for those of you that have very small accounts and you're looking to maybe grow it into something substantial in a relatively short space of time. Right? I'm not talking about doubling it every day. That's ridiculous. If any of you do that, well done. Don't ever do it again. Indeed. But yeah, so disclaimer, the content of this webinar, because it's not a webinar, it's a seminar, and this is taken from another slide, so apologies. The content of this seminar is obviously educational purposes. If you like what you see here, you've still got to go away and do your own due diligence, do your own testing, figure out if it's right for you. I'm not in any way saying that this sort of investment is correct for you. You need to look at your own circumstances, and if you need, obviously, speak to an IFA or something similar. Are we all clear on that? Okay. A little bit about myself. For those of you that don't know me, I'm the co-founder with my brother, who should be here, but he's not at the moment, of a website
probably in a trade.
Pardon?
He's probably in a trade, waiting to take profit.
That's him, right there, glued to the screen. Traders Corner Online. It's a website where we write some analysis and we teach people to trade the markets. All right. Obviously, you know what those websites are like. There are 1,000,001 of them about. We're one of them, and we think we're pretty good. We've been trading since about 2005, so nearly a decade now. We don't have any major banking experience. We didn't roll out of the JP Morgan program or anything like that. We traded retail FX the very same way that you guys do. We do have family that are traders, so maybe that gave us a little bit of an advantage, but we trade the very same way as everybody else here. We've been the guest speaker of various financial exhibitions around the world, and obviously I'm on Twitter, so if you want to follow me, Alex Ong UK, you'll get loads of retweets from the stuff from FXStreet. You'll get the occasional rants if Arsenal lose or do something stupid during a Premiership season. And so yeah. Okay, so scalping 101, trading for an income. It's difficult, okay, but it can be very, very profitable. Scalping is something that it's a little bit more discretionary. So I know there are a lot of people here that would like to, they'd like a system where you follow the rules A, B, C, D, do this, and you make a profit every single time. Unfortunately, that's not the reality of trading. Right? To a point, you can systemize processes, but there's always going to be that element of discretion. There's always going to be that element where you need to make a decision. With this approach to trading, that is a lot more evident. So your trading decisions, probably 50 to 60% of them, will be based on your understanding of the context of the market. Okay? Has anybody tried short-term trading before? Being in and out of a position very quickly. 2, 3 of you? Okay. You had more? How have you done? Well? Don't want to expose yourself?
Okay.
I'm on the
Not well.
5-minute chart and I'm fine.
5-minute chart. This is even quicker
A
than
bit
that.
stressful.
Okay.
Yeah. No, it's good. I mean, the thing that I like about short-term trading is that I get told very quickly whether I'm right or wrong. Right? The one thing you have to understand is you need to find something that's right for your personality, and also something that logistically is possible. If you've got a job that you've got to be at every single day, this perhaps isn't going to work for you, something that you can work towards. But yeah, so the thing that I like about this approach to trading is that I know whether I'm right or wrong very quickly. I'm in and out of a position in a matter of seconds sometimes, other times minutes, very rarely anything over 12, 13 minutes. That's my sort of max trade time. And what that allows us to do is recycle our inventory, recycle our capital over and over again. Again, double-edged sword though, right? Because by doing that, we can put our money to work many times a day, which is great if you're making money. If you're losing money, then it's not such a good thing. So you need to have proper risk management sort of rules in place, if you like. So what I do, for example, is I will say that I'm willing to risk 2% of my account in a day, not on a trade, in a particular day. And then what I'll do from that is I'll break that down into over maybe 5, 6 or 7 trades, and over those trades we'll see what we can do and either come out and make money or not. More often when you're trading this sort of approach, you want to aim to be making money on 7 out of your 10 days trading. In the beginning it may be 5 and 5, but that's what we're looking for. So very high volume, in and out many times, and yes. So it's not for everybody. It requires a great deal of time and fast reactions. Okay, so you need to anticipate the market and what it's going to do. You sat there in front of your screens. I typically will trade in the morning between 8 and 10 o'clock. Most of the time I'm done by about 9, but that's the trading times. But whilst you're there, you can't get up and go make a cup of tea or have a slice of toast. You need to be there and you need to be present for all of the time that you're meant to be trading.
Just the London opening hours?
Yeah, basically. It's actually the European, it's
London
the
and
German
Europe open.
cash open trade.
No, London's all open and you can't go to the toilet either.
Not ever. Never
Not
go
while
to the
you're
toilet for trading.
The 1 minute chart?
It's less, I'll get to it, but
Okay.
it's not a time-based chart.
Okay.
I've spoken briefly about this before, but it's based on price as opposed to time.
Right.
Okay, so that's why you can be in and out of trades in a matter of literally seconds. The key to scalping is not being married to any one particular trade, and literally kind of, you can have an idea of where you want to be trading for that day, but you need to let the price tell you what it's going to do and follow along. If you say, I need to be long today, okay, and I'm only going to be long, it's okay as long as you wait for the correct setups. But if you decide you're going to be long no matter what, and the market's falling off a cliff, and you just want to keep buying, then you're going to destroy yourself very quickly. And I'm so close to the markets, I don't really pay attention to fundamentals at all. I'll trade the reaction, so I don't mind trading through economic announcements. But I don't follow the longer term fundamentals. I really don't care when I'm trading this way. I'm literally just looking to trade the volatility in the market. So when the market's moving, I want to be in. When it's not moving, I have no interest, and I don't care what it does in an hour's time, 2 hours time, 3 hours time. If I don't know if anybody's traded with us live. Is anybody in our? No? Okay. Well, if you're in some of our live trading sessions, you'll see that over the course of an hour or two, I can be long twice and short 3 times in the space of a moment. It's very possible. You'll be taking multiple trades a day. You must accept losses, as you will have a lot of them. No one wants to hear the rest of the presentation now, right? Like, losses? No, I'm out here. But no, you will get a lot of them, and that's purely for the fact that you're taking lots of trades a day. So you need to become accustomed to get to taking losses. The way that you will take a series of small losses, relatively small losses, some small winners and some big winners. You don't want to get into a situation where you have any very big losers, because when you're scalping, that will wipe out a lot of your profits. Okay, so the idea is you're in the market, you'll take a lot of small losses, a lot of little winners, a couple of big winners, but under no circumstances do you take a big loss. We'd have a stop loss in place, right, but it will rarely get hit. So when, again, it comes down to experience, but when you watch the market and you've been doing it for a while, you get the idea of what makes money and what doesn't. And when you're in this sort of trade, you're expecting it to make you money very quickly. If you've been sat there for 3 or 4 minutes and the market's gone nowhere, then the reason that you were in a trade no longer exists, and I'll come out. That may be that you're out at break even, 1 or 2 points loss, 1 or 2 points profit. But once I've been in a trade and it's moved nowhere over a few minutes.
Stop loss, I think.
Pardon?
What's the stop loss?
Typically about 10 points.
10 points.
Okay. So, yes. And ultimately, what you can do to improve your odds when I show you this is you're looking for little reactions to bigger levels. All right, so you still look at significant levels. You can still look at your daily charts and look at the key levels structure where you believe there's going to be some sort of reaction, and we're only looking for little reactions to those big levels, and that will make us money. Okay, so this is where you get your lovely notepads out that FxPro have provided for you all. It's the first time a broker's done that, right? Over the past year, we've come and had a piece of paper. We haven't actually had nice notepads.
Just one question.
No, sorry,
Can you get a
later.
copy of the slides?
Pardon?
Can we get a copy of the slides?
As long as you don't ask any difficult questions.
No.
Yeah, it's fine.
He might.
Pardon?
He might ask difficult ones.
You both can't sit together.
Okay.
It's not partner. Okay. So, chart type. We trade range charts. Has anybody heard of range charts before? 1, 2, 3, 4, 5. Should we all do it at the same time? Because I'm trying to count and I don't know who's put up their hand.
I've heard of them, but I don't trade the range charts.
Okay. Any particular reason why not?
I've got a system, and I trade the system that I'm
That you're comfortable with? Perfect, that's fine. Okay, well, range charts are charts that are not based on time. Okay, if you think about price, what direction can it go? Up, down, sideways? Why does it go sideways?
It's consolidated.
Why is it going sideways?
buyers.
No
What?
buyers, no
sellers.
sellers.
Yes, but what is it that we add to our charts that causes it to go sideways? If you think about price, time, thank you. It goes up and it goes down. If you just think about the price on its own, it goes up and it goes down, right? The reason it goes sideways is that we add time into the equations, and that's what creates a consolidating market. When I'm trading this approach, I don't really care about time. I just want to be in the markets when it's moving, and that is literally it. All right, so if you're trading a time-based chart, let's say, for example, you're trading a 5-minute chart. What's significant about 5 minutes?
price action.
Price action, but why 5? Why not 6 minutes? What would a 5-minute candle do for you that 6 minute or 4-minute candle wouldn't?
No, like you, I trade the London Open, the New York Open.
Yeah.
I wait for the first 3 5-minute candles, and then look for direction.
Okay. Yes, sir.
Because time determines when your candle.
Yeah, it determines the candle, but it's kind of, the point I'm trying to make is it's sort of arbitrary, right? So you can have any time period on your chart. You can put a 3-minute period, a 2-minute, 5-minute, 10-minute, 12-minute, 15. There's nothing, to me anyway, and I'm not saying that you can't be profitable trading a time-based chart, because there are millions and millions of people out there that will make money. I'm just saying from my personal perspective, when I'm looking to be in and out of the market very quickly, even if I use a 1-minute chart, there'll be a lot of moves that I won't see, because I'll be waiting for that 1-minute candle to do something, to form, and by the time that minute's over, the move that I'll be looking to take will be gone. Okay? So range charts are based on price only. We'll come to that in a second. The indicators that we use, so I throw Heikin-Ashi candles on top, okay? And you will use 3 moving averages. And all of this, what this does, by the way, is it's not saying that you can't trade without them. What this does, it builds up a nice picture, and it makes it easy for myself personally to interpret what's going on in the markets. So I understand that people will trade with naked charts with nothing on them, and that's perfect. When we trade longer term charts, that's how we trade. But for this approach here, this helps me to see what's going on very quickly and to keep me honest, if you like. So if I don't have these indicators there, then I'll be tempted to make up stuff that doesn't really exist. I'll be like, does that look like a trade if I turn the monitor on its side? No? Anybody done that? No? No. See, honesty is very important to trading, and none of you are telling the truth here. No one's made up a trade in their life before. Wow. Better people than me. So, range charts. They are charts that are based on price and not time. So on a range chart, every candle will be a predetermined range, if you like. So from the high to the low of the candle, it will be, if we decide we're going to go over a 2-point range, it will be 2 points. And whilst the market is within those 2 points, another candle will not be printed.
Are you talking about Renko?
Similar to Renko's, but not quite. So Renko's is a certain range above or below the candles when the next brick gets created, right? Yeah. This is similar to that, but it's a medium. Renko's are a little bit slower. Okay? But very similar concepts. So the high and low, so let's say for example we have a 10-point range chart. Whilst the price is within those 10 points, it will not create another candle. So it can go from 1 to 8 to 7. It can spend hours there just within that particular range and we won't see another candle. The reason that's significant is that when the market's going nowhere, we don't see the candles. Does this eliminate all of the consolidation, all of the choppy price action you'll ever see? No, unfortunately not. I don't have the answer for that, but what it does do is it clears up the picture a hell of a lot. Does that make sense? Everybody still alive?
Yeah.
Just about. So it allows us to smooth the price action, which allows us to obviously identify when we want to be in the markets, when we don't want to be in the markets. All right? And it's very, very important when it comes to day trading because I need to know very, very quickly what the market's doing. As I said, I'm in and out of trades in a number of seconds, sometimes minutes, and well, it's not going to be longer than 12, 13 minutes. All right, so we need to know very quickly. That's what a range chart looks like. Pretty? Yes? We have like an R. Oh. Yeah? So basically you can see here though that you can identify the price action easily. Most people here can see that this is going up? Can anybody not see us going up? No? You're still alive. There's not a lot of interaction.
It's an uptrend.
Huh?
It's an uptrend.
Thank you very much. I'm just going to talk to you for the presentation.
But on the last
There's
candles,
a pullback, isn't there?
there's a pullback, so it could be coming back down.
Could be reversal.
It could indeed. And there's a competition for that later. There's not really. It is. Okay, so then we throw high Kanashi candles on top of it. Now, with regular candles, they're constructed based on what's going on for that particular candle. What high Kanashi does is it looks at the previous candle as well, and it constructs the current candle. And I'll show you in a second, ultimately, what that does for us is it helps to smooth the price action that little bit more. It helps us, which is one of the most important points, well, it helps me stay in trades for longer. I know that sounds weird when I said I'm in there for a few minutes, but if it wasn't for this, I might literally be in there for milliseconds. So it helps you identify the trend and the sort of momentum of the market, so it helped me hold the trade for longer than perhaps I would do if I wasn't using this, okay? As our job as scalpers is to take little bites of the cherry and often, so you're in and out of the market, in and out of the market. You also need to know when to hold it, okay? Know when to hold the trade. The way the calculation for creating high Kanashi candles, no clue. And it's not really important. Most charting platforms out there will have this available to you, okay? Does anybody use high Kanashi before?
Never
Yeah.
heard it, but I've never used it.
You have?
Yes.
Do you like it?
Yes, very good. Good
Yeah.
filter.
So can you get those in before?
Pardon?
Can you use them in before?
I believe so, yeah. I
Yeah,
mean,
yeah,
you can
yeah.
get custom indicators for it.
Custom.
Okay.
So, but you can. It's definitely available in MT4. Whether it's available as standard, there are different brokers that have different setups. I'm not sure. I couldn't say yes across the board, but you can definitely use it in MT4. 100%.
It's in there.
It is in there, and the man has spoken. So that's that same chart. Does this look a little bit cleaner? Does it look like you can perhaps, if we go back, that's nice, right? But here, you can kind of see when the market's moving up, you'll be able to hold this a lot easier because you're not looking at, you know, little red candles that are just playing with our emotions whilst we're trying to buy. You know? Okay. Then we use the 3 exponential moving averages. These are our permission to go looking for a trade and it lets us know what direction we want to trade in. Is this going to be as quick as just looking at the pure price action? Absolutely not. Okay, because obviously they are lagging indicators. But the point is over the past few years I've been trading this, they haven't done me any harm. In fact, if you apply this concept to any trading system that you may trade, so your favorite trading system, you'll find that using this sort of a concept, if it's trend following, will actually improve your results. I did it based on just a basic trend following strategy about 6 or 7 years ago. which was right approximately 55 to 60% of the time. Yes, sir?
And, sorry, using the system, there's no time frame, is that correct?
No time frame, not this one. No.
Okay, understand.
So the moving averages will be based on the candles as and when they come out, on the price of those. So yeah, as I was saying, a few years ago, I did a little test. So I had a basic trend following strategy using 4-hour and daily charts, and it was right probably 55-60% of the time. Now, through the moving averages I'm showing you here, I use the rules that I'm about to show you here with that to basically give me permission when to go and look for a trade and when not to go and look for a trade. And it increased the strike rate to above 70%, about 72, something like that, just by using that there. So it's quite strong if you use it correctly. So the moving averages are our permission to go and look for a trade. The moving averages are the 25, the 55, and the 100 exponential moving average. That's what I use. Would you like to know the reason for the 25, 55, and the 100? It looked really nice when I threw it onto the chart. Honestly, there's no.
It looks pretty.
It does. Do you like the colours I picked as well? I thought the red and the yellow looked quite. It's hard not to get them to clash.
You're a proper trader, are you?
Yeah. No, I don't know why you're listening to me at the moment.
Just off the street.
I just rolled off. I saw this thing in here. I
And
knocked on the door and they're
energy,
like,
so,
no. The reason I use these moving averages is that I played with, a few, not loads. There's nothing scientific about it. It just helps me identify when the trend was in place and when not to trade. So something that will keep you honest, right? When the 25 is above the 55 and the 55 is above the 100, you have permission to go and look for a trade. It isn't saying that you have to take a trade. You're not trading a moving average crossover or anything like that. It's literally just saying the market is now in an uptrend. You can go and start looking for long opportunities. All right? If the 25 is below the 55 and the 55 is below the 100, you then can start looking for short opportunities. And under no circumstances should you be long in a market if the moving averages are indicating that you're in a downtrend. Okay? Simple as that. Right? It's just, yes sir.
I have one question.
Yes.
Very, very interesting chart, uptrend.
Yep.
Now, when you have the retracement, would it be worthwhile putting a trend line going down, and then when the retracement corrects, the movement is back up? You've got the rest of the presentation. You continue. No.
He's thinking ahead of the next slide, isn't
Yeah,
he?
you are.
You're on the next
You've
slide.
seen my slides, damn it.
Sorry.
Hey, you're on the next slide.
Yeah, sorry. I apologise.
But yeah, ultimately, so the moving averages tell you to go and look for a trade. That's literally it. It tells you when you can look and what direction you want to be looking for a trade. You've still got work to do. Remember that I said that this isn't a trading system where it's going to do all the work for you. So you still need to interpret this price action here and determine whether or not it looks harmonic. And what I mean by that is when the market's moving up, what you want to see. If you look at this move here, for example, this move here, right? There's little resistance against it. I don't want to be trading here. So I wouldn't be looking to trade that pullback here because this move up has been met with some resistance. It hasn't been a nice smooth sort of, do you see what I mean? Now, you can't really see that here, but this chart there's a lot of price action now based over about an hour worth of price action, worth of charts, okay? And what you want to, the part where the discretion comes into it is understanding that, this sort of, even though that would have made you money if you bought that, from my perspective, I wouldn't trade that because I don't understand. Looking at that, this here, I don't know who's in control. I've seen that there's been a momentum move to the upside, but this pullback here, it looks like there's a fight between the buyers and the sellers. I don't have a clue where that's going to go. I don't know if they're going to win or if they're going to win, so I'm not going to buy it here. If you contrast that with this here, this pullback is met with little resistance. So from my perspective, when the market then starts to go long again, I can be sure that I'm seeing the buyers take control. All right, this may not be so, this may just be some profit taking, fair enough. But the point is that when we start to get the market moving in the direction of the trend again, I have a better idea of who's in control versus trying to take along from here when they're just fighting amongst themselves and you have no clue. Does that make sense? Okay, and that's where, and you can apply this to time-based charts as well. So if you trade daily charts, 4-hour charts, 15-minute charts, this is actually a concept that you should apply to your trading because it will make a difference. You don't want to, how many people here trade the trend, by the way? Anyone? Okay.
Two things.
The trend is your friend.
The trend is your friend until the end of the end.
So all of you that trade trends, even if you don't look at this system here, you don't use this strategy, please listen to me. You want the markets to be harmonic. You want to know, have an idea of who's in control. If you try and trade a system where you just look for the, ABC, this indicator does that, and now suddenly you take a trade, you're going to lose money. I can promise you that. If you start to get a little bit more selective and wait for the charts to make sense, and wait to look at a chart that you can tell who's in control. So when the market's moving up, it's met with little resistance. There's momentum to the upside. When it's pulling back, it's probably most likely profit taking as opposed to lots of sellers getting involved. And there isn't so much of a battle there because you want to be in high probability trades. Are you going to be right every single time? Unfortunately not. But by taking that approach, by waiting for harmonic markets, what I term as harmonic markets, basically it's a pretty looking market where you can see the market swinging up and swinging down, up, down, like that. Okay? Rather than this crap here. Sorry, this stuff here. Noise, indeed. Alright, so the moving averages are your permission to go and look for a trade. So just a quick recap, we're using range charts. I use range charts. I use this primarily on the DAX. Right? FxPro have MT4. FxPro also offer the DAX, so you can. It's the German stock index, right?
No forex, no.
You can use on Forex. Forex is a bit slower, as I said. But my personality, I want to be in and out many, many times, and I want to know whether I'm right very quickly. You can use it. The FTSE's a little bit slower.
Okay.
The two that I like trading this strategy with is the DAX and the Nasdaq. The S&P is horrendously slow. It's worse than watching paint dry. I haven't really traded the Dow Jones or the Russell, so I wouldn't have a clue. But Nasdaq. So if you only have time in the evenings, I'd look at the Nasdaq. If you've got time in the mornings, I highly recommend that you would look at the DAX.
So it needs to be a volatile market like T9s, you just wouldn't.
Yeah, it needs to have movement. It needs to move. Well, it doesn't have to move quickly, but it needs to have movement. And it's better for me, as I said, you need to understand, if you want to be successful trading, you need to understand who you are as a trader, what makes sense for you. My brother is the brains of the operation, if you like. He will look at the fundamentals, and he can sit in trades for weeks, months, well, not quite years, but for a long, long, long time. For me, that doesn't work for me because I interfere with the trades. So if we're in a particular position and we've been in it for weeks, I already want to take that trade off, add some to it, go into something else, I lose interest. So you need to understand who you are as a trader. Has anybody experienced that where they're trying to trade a system that just doesn't work for them, for their mentality? You have, yeah? Pardon? Exactly, it's got to make sense to you. When we do seminars, an exercise that we do, and you might want to do it when you get home, is we give everybody a diary of the week, Monday to Friday, and we first of all ask people the question, you want to be a day trader, or do you want to be a swing trader, how do you want to trade, right? And some people will say day trading, and then we go through that diary and we say, okay, now take this and shade in there where you're available to trade consistently. So don't just say, well, some Monday mornings I've got about an hour in the morning, so I can probably roll up there and do a bit. And then I've got that Wednesday, I've got this, I could probably fit 15 minutes in there. Do you see what I mean? And what happens is that you tend to see that people say, yes, I want to be a day trader, and they may have the personality for it, but actually it's not something that they're able to do. So it is difficult. You need to have the right combination of something that suits your personality, but also something that makes sense. There's no point saying I'm going to day trade if you don't have the time to do it, unless you look at another market. So for example, you could look at the US markets into the close, which is when you would trade the NASDAQ. Yes, sir?
What about gold, Alex? That moves quite fast.
It does. I haven't traded gold before, so I couldn't honestly give you any sort of...
There's a lot of volatility.
yeah. Oil too, apparently.
Yeah.
Again, I don't trade that either. So I can't... I don't want
Maybe you
to
could
make
try it.
something up.
You can
Pardon?
try it maybe.
Yeah, but I make money with this. I don't need to...
Yeah.
And that's another thing. You know, once you find something that makes you money, try not to get too bored with it and think, oh, there's this new shiny toy over here. Let me go and play with this. You know, if something makes
Stick
you
with what
money,
you know.
stick with it and make you money, because that's the reason we're here, right? The reason that you're trading the markets hopefully isn't for entertainment. Although some of you probably is a little bit. But we're here to make money. So this makes me money. I'm not going to change this until it stops making me money, just personally. But you're welcome to look at oil or gold or whatever it is that you feel comfortable with. So does everybody understand the setup? You understand what we're looking for? Okay, so the next concept, we've already sort of touched on it, is the concept of value zones. Okay? And that sort of goes with what I was talking about to do with a harmonic market. It's knowing when to be looking for in the uptrend, knowing when to look for your buys, and if you're in a downtrend, knowing when to look for sells. Now, again, I'm not saying that you can't trade breakouts or anything like that, but I prefer to trade after a pullback. But not every pullback is created equal. Alright, you don't want to be trading at the beginning of a pullback. You want to be trading when you feel like the market has had enough time to accept the new price, when it's ready to make the move up. How many people have got into a trade before, they bought it, got stopped out, and then the market moves in their direction? You used to be me. And you used to think there was like that gremlin in the back of your computer, right?
Tell you what I have done. It's gone like 50, 60 pips the wrong way. It's come back. I've got out of broke even, and next minute
It's gone in your
It's gone.
direction.
Can I say that the banks have got a strategy? They spike, they know where the stop losses are, and they spike it so people lose their money and then it comes back.
Yeah, I mean, I don't think it's as sinister as them wanting
You
to
don't
lose
do
their
it
money,
for
but it's more from a liquidity perspective.
Especially
So
on
if you're a big
number, on a
fund,
big number when everyone is going to get in, they spike it up. People think it's going up, and then it comes back.
yeah, I mean, obviously you can have that as a profit motive, but a lot of the times when you see that, that will be looking for liquidity. So the banks, the traders on the desk, for example, they need to take orders on behalf of their clients, and they're sat with that position. So they take it in a place where they know that there's going to be liquidity. So they might create a false market. You know, let's say, for example, they're looking to sell. They create a false market where everybody starts to buy, which provides them the liquidity to sell into. So yeah, I don't know that they look at our accounts and think, Alex is in the market now. Wait for it. Wait for it. Get him!
You move your stop loss, Alex, above the big number.
I don't have stop losses. I'm joking.
or
I don't move my stop loss.
No, but if you move it above the big number, you know, you cover, don't you?
Potentially, unless they want to move it above the big number as well.
Well, I don't think they do that.
So,
Do you
I
want to move it
wouldn't
back?
like to speculate. I like to speculate in the markets, but not in what they do or don't do. All I know is what I'm showing you here works. Okay, so this strategy here, it makes money. It's made money. It made me money. If you look at our Facebook group, you see that it makes a lot of our members money as well. We wouldn't ever teach you something that we don't do ourselves. What other people do, I can't actually comment because I don't know every trader on the planet, so it's impossible for me to.
You do what works for you.
Exactly, and this works for me. It may not work for you because you may not want to be in the markets for a few seconds at a time. But yeah. So anyway, I digress. Back to value zones. So we want to know that when we're getting into the market. Yes, sir.
I don't know when to ask this question, but I'll ask you anyway. Do you trade the FTSE and Wall Street, and if not, why not?
Because they're too slow. I find they're not quick enough and they're not volatile enough.
which is the reason why you do this one.
Yeah. Yeah, my personality is I like constant reassurance. So I like to know I'm right a lot.
Wonderful. You really are.
Pardon? Thank you. Thank you. Thank you. But only you said that. Guys, come on now. I'm starting to feel bad for myself. But yeah, I like to know that I'm right a lot, and I like to know it very quickly. If I sit in a trade for too long, I'm going to interfere with it, I'm going to screw it up, it will go wrong. It's just, and I understand that's why I'm for as a trader. So value zones, I will get there very quickly. Value zones is ultimately areas on the chart where we believe that price has been accepted. Okay, people use Fibonacci's and things like that. Anyone? One or two of you. So it's kind of similar. We don't use Fibonacci retracement levels. We use the moving averages to indicate to us when the market is right for taking a trade. Now, I'm not for one moment saying to you that the market is selling off here because it's hit that moving average. That's not what I'm saying. I'm saying that we wait for the market to come back to within these moving averages, because over the past few years, I've found that when the market is within that sort of area there, and you've got a nice looking pullback, okay, so everything makes sense from that perspective, the context is right in the chart, that's when I'm going to get into a trade that's going to cause me the least amount of issues, it's going to pay me in the quickest amount of time. Alright? So what we're looking for is price to make a momentum move, moving averages to be lined up. Okay, this is the system where you're trading. Moving averages will be lined up. We wait for a momentum move in the direction that the moving averages are pointing. You need to have momentum. If there's no momentum move there, don't trade. And what I class as momentum is larger candles, very little resistance against it. So if it's going short, I don't want to see loads of green candles in the middle here. That doesn't give me a fill me with confidence. It needs to break the previous high or low. You don't want to be trading into a major level. Location is key when trading, right? You need to make sure that you're trading in the right place. So don't be trading into any massive levels. And then you want the market to pull back to within what I term the value areas. Okay? And that's coming back to between the 25 and the 100 moving average. Typically, my sweet spot is somewhere in between here, the 25 and the 55. That's what makes sense to me. That's what typically will get me into a trade where I take on the least amount of heat. You know, so and that's, do you remember when I said earlier that sometimes you may be in a trade for 3 or 4 minutes, it goes nowhere and you come out. Anybody remember that? So that's what I'm talking about. You're waiting to get into areas on the chart where you can see that as soon as you get in, you more or less instantly get the move. If you get into a market, so you got in here, before it stopped you out, you'll notice that the market's kind of did the ring about. So we're looking to get into areas where the market will more or less immediately pay us. If it doesn't immediately pay us, I'll come out of the position. Whether that be for a small win or for a small loss, I'm not married to it because I can get back in again at some other point. Right? Is anybody bothered about coming out of a position at a small loss? No? Good. Because when you trade this approach, you will take a number of small losses. But that's good. Because you can always get back into the market. If it goes again, you can get back into it.
They're all sell signals, aren't they?
Pardon?
They're all sell signals.
There are sell signals.
No, they're all sell signals, aren't they?
These?
Yeah.
Yes.
Yeah. Is that what you look for? Sell signals? Or
Yeah.
Yeah.
Yeah, so you wait, you look for a pullback. I mean, Raymond mentioned earlier about maybe drawing in a trend line or something like that. So you can put that there. You can use whatever it is that you look for in terms to trigger a trade that you want. So you use your favorite trigger, okay, but this will put the right context around the market for you. Because that's what's important. When you want to trade and you want to make money, you need the right context. Sorry, yes. Please.
So the circle you have there, how many candles would you wait for a confirmation of the sell?
It's not really number of candles, it's area on the chart. So the fact that it's pulled back to within the moving averages, that's what I look for. I mean, truth be told, that probably isn't enough of a pullback for me. I'd like to see a little bit more than that. Okay, but it kind of illustrates where you're looking for the price to be. Alright? What was I saying? What was I saying?
No, I'm not sure.
You're not listening?
I cannot read the mind.
You weren't listening?
When it smashes through the
1 second, the
oh,
gentleman. 1 second. Yes, sir.
One question about this candle. So do you actually focus on candle patterns or just candle width?
No, you don't really see the candle patterns, so
You
you
don't-
can't see. I mean, the one thing that I will say
Yeah.
is that the one thing that I will say is that I'm looking to get in on a strong candle in the direction that I want to trade. So I want to be trading with the momentum. If the market, so if you look at this here, I wouldn't interpret that little candle there as a signal to take a sell. I want to get into the market. I want momentum to take me into the market. Okay, because then I want the market to tell me that I'm right very quickly. If I get in here on something like that, I risk the market going sideways. I risk the market going sideways anyway, but when you get in on a stronger candle, so something like this here, or this here, then you have a better chance of the market paying you quickly. Alright? Yes, sir?
So when it smashes through the 25, the candles, is that like a indication?
Yes.
Okay.
So when it comes to within this area here, you could draw Fibonacci on there if you wanted to. But as I said, this is very quick, so I wouldn't have time to draw that. Sometimes the market moves. So I've literally, I mean, when I'm trading
It's a sell
this,
signal, isn't it, when it smashes through?
it's not the sell signal when it smashes through.
Right.
It's the signal to get ready.
Get ready
So-
to put the order in.
Yeah, 1 second. So when I'm trading this, my typical setup is one screen I'll have my brokerage account open with a trading
It's all
ticket,
live
with
at
a deal
market,
ticket.
isn't it?
Yes.
Execution at market.
Yeah, exactly. So I have my finger hovered above that. When this is pulling back here, I have my charts on the other screen, and it's literally, you need to be ready. So it can't be that you see, because by the time, once you get your first signal to get in, it can be literally seconds, and the market will have moved 3 or 4 points with you. So you have to be ready, which is why you need fast reactions. If you're not so great with a computer, and you're going to fumble about, this probably isn't the best
And
trading
what's your
system.
target? What's your target?
I don't have a target. I get out when the momentum has died down. And you'll see when you trade this, it's quite obvious. The market moves very, very quickly, and then it starts to slow down, and when it starts to slow down, it'll come out.
Okay.
Okay, but more often than not, you get a very good risk
So when
reward trade.
when it slows down,
Yeah,
it's time.
yeah. Yes, sir. This gentleman, and then this gentleman.
Just want to ask you a multiple question.
Multiple questions.
Yeah, I mean, several things in one go.
No, one.
Well, can you apply the same principle to time charts? And how do you identify a strong candle?
Yes, you can. But I personally haven't, but you can apply the moving averages and things like that. Yes, you can. How do you identify a strong candle? Again, it will be, and this is a problem with time-based charts, is by the time you see that it's a momentum candle and it's closed, the market might be down here, which is one of the reasons I don't use time-based candles for this. Because some of these moves, I mean, well, you can see, this is 8:12 in the morning, that's 8:09, and down there's 8:12. That's 8:33, and down there's 8:39. It goes very, very quickly. So if you waited for like a 5-minute candle, for example, you would have missed that move.
The other part of the question was, in terms of value zones, now you've got 3 moving averages. So how do you know you're in the right value zone? You know, whether it's faster
Well, that's the discretionary part. You'll get that with experience. So this system isn't something that you're going to say. Every different trade that you take anywhere, to be honest with you, will have a different story behind it. Your job as a trader is to look at the clues that the market gives you, is to build up a picture, right, a case, if you like, for the trade that you're about to take, and basically execute upon that trade's merits. Okay, so for example, there may be somewhere, even if the market pulls back just within this area here, okay, I wouldn't necessarily take that trade. Well, not this one here, but you wouldn't necessarily take it, because if it's just been a massive move down and it only takes a little move to hit one of those moving averages, I don't want to see that, because in my mind I want to see a harmonic retracement. You're looking at typically somewhere between 40 to 50% of the prior move, if we're looking at an exact number. Yes, sir.
You were talking about speed in executing the trade, right? Sometimes I find it tricky to stick to a ratio, a risk-reward ratio, or decide the entry point, decide your stop loss, and take profit so quickly before you actually lose the.
Yeah. Well, I don't have a take profit on.
Okay.
Personally, I have my trade ready. I have the ticket open, and I have like it's almost like an arbitrary number. It's 10 points to start with. Once I'm in the trade, then I'll adjust it.
So you trail the stop loss.
I don't trail it all the way down, but once I'm in the trade, I'll adjust it. If it's too far out, I'll adjust it and bring it closer in.
So you only use the stop loss now.
Yeah, because I don't want to limit my profits, because sometimes this market can move, 50, 60 points in a matter of minutes. So I don't want to just take 10 points. I'd rather have.
I've never traded the DAX. What are the opening hours?
Yeah, futures open at 7 o'clock our time.
In the morning?
And but I trade from 8 o'clock when the cash opens.
So it opens at 7 and closes at...
It closes at about 4. So I'm never trading at that time, about 4:45 or something.
And the reason you don't trade that time?
So I've made money
better in the
usually by
morning.
that. Yeah. Usually, I mean, if you...
There's more volatility in the morning.
It's not to say that there aren't moves later on in the afternoon, but in the morning, within between 8 and 10, usually I've made enough money made or lost enough money, by the way. I'm not implying I make money every day. I'm more than happy to lose money, but by that time I've done.
And you're saying you don't set a target, you just basically sit in the trade, and when you see it
start to slow down, and it will be very noticeable.
You're not your stop loss or anything like that?
No.
Do you move your stop loss to break even?
No. I don't have time. It literally is so quick. Very, very quick that you'll see when the trade is over. I know it's very difficult for you guys to visualize that now, but I promise you, don't trade this, just watch that market, and you will start to see when the momentum moves up, they move very quickly. When the market starts to slow down, you will see that. It's very evident.
Maybe you could try on a demo country first, just to get a feel of it.
Yeah, definitely. I mean, FxPro have demo accounts with the DAX. So, yes, no. You're going to ask a difficult question. I don't want to hear it. I'm joking, Bon.
But on the charts that you've been displaying,
yes,
with this being price charts, as opposed to having the time value to it. In this chart here, the one that you showed before, each of those candles, what's the value of that? Are we talking 2 or 3 pips?
Yeah, 2 or 3 points generally. Well, 2 points, 4 ticks usually.
So would I be right in assuming that you could alter that based on the kind of market you trade? Something like the DAX, what is typically 1 to 2 pip spread, and you're going to get that bit of volatility. It's obviously pretty useful to have a very tight price action.
Yeah.
And I think to the gentleman's question before, when you look at something like gold, where it's typically 15-20 cent spread, there's no point having a 10.
Oh no, of course, yeah. You need to alter it to the absolutely to the instrument. So it isn't, So what I'm showing you is here what I use for the DAX. So as Ed, I knew that, as Ed said at the back there, if you're looking at something like gold where there's a bigger spread, obviously you'd use bigger range. Okay? Yeah.
So a new candle emerges, once say you have a 2-tick range, a new candle emerges when you've broken that range.
Exactly, so when it goes 2 to 3, the new one will come, and then...
Which is why the timeline is sort of sometimes like crazy, sometimes it's really slow.
Yeah, exactly. So you'll see that you can actually have a chart, which actually at some point, was it this morning? It looks like that. You can have a chart where all of this here is 15 seconds.
Yeah.
You can't ever trade that, by the way. It's impossible to get in, but you'll just see it go absolutely ridiculous.
Scouting like this, you definitely need broad spreads.
Well, not necessarily. You need execution.
Because if you're only taking a bit,
you're not taking a bit. So typically, you're going to find sort of like a 2-point spread if you trade the DAX futures. Roughly, that's sort of about where you find it across the board. But that's fine. That's more than manageable. Obviously, you don't want 10, 20, 30, etc. If you've got a larger account, you can obviously trade the futures market, but that's $25 a tick contract, so 2 ticks at a point.
DAX is normally 2 points.
2 point spread, roughly.
Okay, what across the board?
Yeah, that's the average. Okay. So basically, yes, the trade setups, what I've been showing you here, allows us to extract money from the markets on a very, very consistent basis. Once you're trading the system and you've had some time to learn it and to understand the discretionary part of it, you should be looking to be profitable on 7 of your 10 days. That's the point of day trading and scalping like that. If you're not doing that, you may as well swing trade and take a bit of a step back. Okay, so it's it's high volume, it's lots of volatility, you're going to have lots of small winners, lots of small losses, and then you'll have some big winners as well. So what you'll find is your equity will kind of be like this. Up, 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 not that, not the down part. Okay? I know we've had questions. Are there any questions?
Does the nature of it mean that you can only realistically do it for an hour and a half, 2 hours max a day?
It is, yeah. I mean, it's a good.
You obviously get early on when I guess you're getting the volatility and most of the price action is, but realistically, is 90 minutes probably the most you can do in a day?
Yeah, I mean, sort of 2 hours, roughly. So 8 till 10 is typically when I trade, and it's good from the perspective of obviously at that time of day you can make money more often than not. There's the moves that allow you to make money, but sort of what you're sort of going with there is with regards to the risk management as well. It also stops you killing yourself because this can be very, very volatile throughout the day. And if you take a loss in the morning, you try and make it back in the afternoon, you're just going to compound that, which is not the cleverest thing in the world. So if you limit yourself to a short period in the day, first of all, you will be able to make money. Secondly, you're not going to lose a lot of money. And third, we're all trading for life and freedom and stuff like that. You don't want to trade one job for another. I don't anyway. Yes, coming to you 1 second.
Can I just double check, so on the DAX your range was 4 ticks?
Well, I have 4 charts. When I have a 4 tick range, 6 tick range, 10 tick range and a 14 tick range, which when you're looking at MT4 something like that will translate into 2 points, 3 points, 5 points and 7 points. Okay? Yes, sir.
And then this one I'll ask you, I know we talked more about, but do you trade the Forex market as well? And the second part of the question is, this is the cash market you're talking about, not futures.
This is the futures. Well, you can trade either, to be honest. The futures is a little bit more volatile. It might be easier to start with the cash, but this is the futures that I primarily trade.
That's futures?
Yes.
And you don't trade Forex pairs?
I do trade Forex pairs, but not with this here, no. It's too slow, personally.
Sometimes with Forex, it's like watching paint dry, isn't it?
Yes.
Especially on the CAD.
Yes.
You know, it can just sit there for
an hour and a day.
Just do that.
Yeah.
For 2 hours
and do nothing. Yeah. I don't trade this on FX. It just isn't volatile. Yes. Oh, come 1 minute. I'll be there. Yes, sir. Yes, about 2:30 in the afternoon. Yeah. I prefer the Nasdaq on the close, to be honest with you. I don't know why, but so from about 7 o'clock onwards. That's
right into the close.
Yeah, exactly. You tend to see that when the Nasdaq starts to make a move, and you see that on these charts into the close, it tends to continue. I'm talking about a proper momentum move, not sort of like it meandering up a little bit and down a little bit. If you start to see momentum move in the close, then that it tends to you'll get a pullback.
Is that also futures?
Yes. Sorry, sir.
But the Nasdaq, US sometimes there's time where it's not there, like something 9 billion points.
Yeah.
Something definitely attaining and
Yeah.
you find something similar on that.
Personally, I haven't looked into that. It may happen. I don't know. I haven't looked into it. So, yes, sir.
So even if the market's ranging rather than having a definite uptrend or downtrend, using the range charts, does it give you that upward or downward direction? You know what I mean?
Sorry, could you clarify? Maybe I wasn't listening properly. I apologise.
Because sometimes you have a ranging market and you wouldn't want to really trade that. But using the range charts, does it then give you the upward or downward?
Yeah, it does. So depending on the range chart, you can't remove the ranging periods completely.
Yeah.
And part of success with any system is also understanding when you're in those periods. So when I trade with our community, a lot of the times we'll be sat there for the first half an hour because I'm waiting for a particular range to be broken so that I'm clear on what party is in control. That's all trading is figuring out which is the more dominant force and trading on their coattails, so to speak. Yes, sir.
Just a quick one. So
blinded.
So the point you just made there about breaking a range, so you're obviously looking at some form of support and resistance somewhere.
Yeah.
Where are you determining that from? Obviously that has to be a time-based chart.
I look at like the daily and the 60-minute, but you can also see intraday levels on the range chart.
So from that you're trying to assume where support and resistance actually is when you're using an MT4 indicator. And then you're using that in turn with this system that you've got here as an indication that this is the potential to maybe short or go long in the
Yeah,
market,
exactly.
based on the support and resistance levels
Yeah.
that you already know.
Yes, you want the market to prove to you that it's worthy of you trading it, and by that I'll look at like the 60-minute chart, the daily chart, look for key levels, obvious support and resistance levels. If you need to squint, the level doesn't exist. You need to see the market come down and bounce up or go up and hit the ceiling and bounce down. That's a support or a resistance level. You don't want to trade into those, and the best trades are usually when you see momentum through those levels, followed by a pullback, and that's where you want to get into a trade. Okay, we're apparently done. So thank you very much. There's going to be drinks and stuff.
Yeah, if you wait a couple of minutes, it's all in the fridge because it's so hot, so we'll go and grab everything from the fridges. So do stay and for the next hour, and you can obviously ask the next questions and us and have a general chit chat and whatever else. So just thank you for coming. We'll be back.
Thank you very much.